Good day to you, QDT family. It's no secret that inflation poses a major risk to the stock market and to the cryptocurrency market. The inflation numbers that you see here have also been putting significant pressure on the stock market. Now, the Fed can control this inflation by raising interest rates. We don't know what the Federal Reserve's plan is until early May when they have this meeting to decide on how aggressive they're going to be in raising interest rates. Because the key thing that everyone is waiting for is peak inflation. If peak inflation was in March, the Fed may not increase interest rates as aggressively. Now, when the Fed does increase interest rates, this is also likely to induce a bear market. This bear market will likely be caused by the Fed not doing the exact right thing. So we can assume that since we don't know when peak inflation was, we don't know how the Fed is going to react on how aggressive they're going to be raising interest rates. We likely can see quite a bit of incoming volatility, not to mention the war in Ukraine and all of these other things that are going on in the world. So what does machine learning think is going to happen to Bitcoin in the long term? Let's take a look. We can see this group of machine learning models. It's actually predicting out 60 days for Bitcoin. These models believe that Bitcoin is going to fall. And that's kind of in line with the expectations on what's going to happen to the stock market. Machine learning believes that within a 60-day time frame, we should fall to $37,841. It looks like we'll be continuing to make higher lows. And machine learning does update every day with all the new information going into these models. So this prediction could change by the time you're watching this video. But as of right now, April 20th, machine learning does believe that Bitcoin is coming down. Let's take a look and try to understand what the machine learning models are telling us. We're looking at the Bitcoin model that is predicting 60 days out into the future. And I wanted to take a look at the information that machine learning thought was most important. BTC capitalization over 1 year. Now, interestingly, BTC supply for miners held in all addresses within one hop of mining. That's fascinating. Here it is again, BTC supply miner held by mining entities. How much Bitcoin are being held by miners? We also have Bitcoin cost per transaction and Bitcoin market cap. Another one of the top drivers is Bitcoin miners revenue. This got me thinking, how can these things be predictive? Why are these things predictive? Why is Bitcoin mining revenue predictive? According to the CME group, miner revenue, which was one of the top drivers, is very predictive to Bitcoin. You can see mining revenue falling and Bitcoin falling, and that's what they're showing here on the graph. Bitcoin falls 83%, mining revenue per transaction is very low. So mining revenue falls and then Bitcoin falls. Let's take a look at that model again. Bitcoin mining revenue. Now let's take a look at Bitcoin mining revenue compared to Bitcoin. As Bitcoin mining revenue falls, Bitcoin falls. Bitcoin mining revenue is near a low. Exactly what the machine learning model is kind of telling us. We're going to come down. Bitcoin mining revenue is very low. As you dig into this stuff, it becomes really, really interesting. So let's bring all of this together. We have a long-term Bitcoin model that uses 20,000 plus predictors pointing down in 60 days. We have massive inflation and the Fed needing to deal with it by raising interest rates, which is going to put a significant amount of pressure on the stock market. And we all know that Bitcoin is correlated with the stock market right now. We have mining revenue down, and we have miners having to sell a lot of Bitcoin to buy more machines, to buy power, and they're each one of these little machines that you see here each make between $5 and $50 a day. There is a huge amount of money going into Bitcoin mining and a huge amount of money, amount of Bitcoin that needs to be sold to support these operations. So mining, inflation, stock market, interest rates, all of these things together are kind of like a perfect storm, not to mention the war in Ukraine, not to mention COVID, not to mention supply chain crisis. This perfect storm puts a lot of pressure on the stock market and on Bitcoin. We take a look at this model. How good is it? It's actually performed really, really well, been really predictive on the long term side. What we're seeing is that all of the most modern machine learning is predicting Bitcoin to come down, and so is the stock market. I think there's going to be significant opportunities to buy Bitcoin somewhere down at 37,000 and a half would be a great place to try and put on some more Bitcoin onto your position. Please remember that I was never trained as a financial advisor, and I can't give you financial advice. So for today, I think that concludes Machine Learning with Bill. I hope that you learned something. Thank you very much for being here and being to the end of the video. Take care, everyone. Bye.